Imagine waking up tomorrow to headlines like this. For the first time since 2008, the banking system is in crisis. Multiple banks are at risk of failure. Bank runs are occurring. The Federal Reserve has announced emergency measures to try and stop the crisis from worsening, and there's panic in the markets. This scenario isn't far-fetched. It's actually much more likely than you might think. And if it were to happen, the consequences would be absolutely devastating. In this video, we're going to discuss what would happen if banks shut down tomorrow. First off, why would banks ever shut down? Well, let's take a look at Silicon Valley Bank, which shut down earlier this year after an extended period of rising interest rates caused its bond portfolio to lose value. SVB was the 16th largest bank in America, but because of poor management, it became the largest bank to fail in U.S. history. When it collapsed, customers began withdrawing their money only to find out that the bank had gone bankrupt. As a result, regulators intervened and placed the bank into receivership, but not before thousands of businesses and investors lost millions of dollars, causing one of the most painful lessons in modern financial history. Rising interest rates are one of the biggest threats to banks. When the Fed raises interest rates, existing bonds become less valuable, which can cause the bank to lose billions of dollars in net worth. At the same time, when interest rates rise, depositors often look for better yields elsewhere, reducing the amount of deposits that the bank has available to lend out and potentially exposing them to liquidity risks. This is precisely what happened with SVB. Customers began withdrawing their money, but the bank didn't have enough cash on hand to go around. Now, it's important to note that this doesn't happen to just small or regional banks. Earlier this year, Credit Suisse, a global banking giant with over $500 billion in assets, found itself on the brink of collapse amid similar circumstances. Thankfully, UBS agreed to buy Credit Suisse for $3.25 billion, averting a potential disaster. If something like this were to happen again, but this time to a larger bank, it could send shockwaves throughout the entire economy. In fact, this exact situation occurred during the Great Recession when two of the largest banks in America, Bear Stearns and Lehman Brothers, went bankrupt. Let's use Lehman Brothers as an example. They made risky loans to homeowners who couldn't afford mortgages, leading to billions of dollars in losses when the housing market crashed. Eventually, the government decided it wasn't worth saving the company and allowed it to file for bankruptcy. This led to thousands of employees losing their jobs, counterparties losing billions of dollars worth of exposure, and a general loss of confidence in the entire financial system. Now imagine if Lehman Brothers was twice the size it actually was, if they were a bank like J.P. Morgan Chase, Wells Fargo, or Bank of America. What if they had trillions of dollars in outstanding debt and derivative contracts? A bankruptcy of this scale would not only lead to widespread panic, but it could also bring down other large institutions with it. In fact, the CEO of J.P. Morgan, Jamie Dimon, predicted exactly this scenario would play out. He warned that a large systemic event is inevitable in the financial markets and that no one seems to care. He continued by saying, "We all sit here and say it's not going to happen, it's different this time. But it will happen, and it could be worse than 2008. He's referring to the credit event known as the long-term capital management crisis, which occurred in the late 90s. At the time, this hedge fund had gotten overly leveraged and was on the verge of bankruptcy. To prevent a financial panic, the world's largest banks bailed out the firm for $4.7 billion. This set a dangerous precedent where Wall Street firms believed too big to fail. Fast forward to 2008, and we saw the worst financial crisis since the Great Depression. When the housing bubble burst, investors began withdrawing their money from these institutions, but they didn't have enough cash on hand to go around. This forced governments to step in and bail out these companies. These events highlight how fragile our financial system really is and how close we were to total disaster. But even if our financial system managed to avoid a complete meltdown in 2008, we still saw unprecedented levels of inflation, slower economic growth, and higher unemployment. And all of this pain was felt most acutely by those who were already struggling to make ends meet. So let's talk about what would actually happen if banks shut down tomorrow. The first thing that would happen is a wave of bank runs. People would begin withdrawing their money as fast as they could, but the banks wouldn't have enough cash on hand to go around. This would lead to the government stepping in and placing limits on withdrawals, similar to what happened in Cyprus in 2013. The government said that everyone could withdraw 100 euros per day, which meant that people were essentially forced to abandon a portion of their life savings. The second thing that would happen is the stock market would crash. Investors would sell everything en masse, plummeting stock prices and wiping out trillions of dollars of wealth. Now, to be fair, this isn't necessarily a bad thing. If you have a long-term perspective and aren't planning on selling your investments anytime soon, then you can just hold on as usual. However, many people do and have this luxury and need to sell their investments to pay for basic necessities like food and shelter. The third thing that would happen is the US dollar would collapse. With the banking system offline, people would have a hard time conducting basic transactions, which would lead to the US dollar becoming practically worthless. The fourth thing that would happen is the economy would grind to a halt. Without a functional banking system, businesses wouldn't be able to operate. The supply chain would break down, factories would shut down, and people would lose their jobs. This would lead to higher unemployment, lower GDP growth, and widespread panic. And finally, the fifth thing that would happen is chaos would ensue. Without a functional banking system, people would have a hard time paying for basic necessities. They might resort to bartering goods and services instead of using money. We could see widespread civil unrest, looting, and rioting. It would be a nightmare scenario. So what could we do to prevent this from happening? The best way to prevent such a disaster would be to implement policies that promote stability within the banking system. This includes things like stronger capital requirements, better liquidity positions, and stricter regulation of financial institutions. We also need to raise awareness about the importance of financial literacy so that people understand the risks involved in investing in banking. Now, despite all of this doom and gloom, it's important to remember that there is still hope. We've seen similar crises before, and we've always managed to pull through. The key is to learn from past mistakes and make sure we don't repeat them. At the end of the day, we can't predict what's going to happen in the future, but we can prepare ourselves for different scenarios. If you have a strong financial foundation and an emergency fund, then you'll be able to weather any storm that comes your way. Here are some things that you can do today to prepare yourself for a banking crisis. First, diversify your holdings. Don't keep all of your money in one bank. Instead, spread it around to different institutions so that you're not overly exposed to any one company. Second, keep some cash on hand. This will allow you to take advantage of any opportunities that may arise during a crisis. Third, be prepared to cut back. If the economy slows down, you may need to reduce your spending in order to make ends meet. Finally, stay informed. Keep up with current events so that you're aware of the risks that are on the horizon. By taking these steps, you'll be able to protect yourself and your family in the event of a banking crisis. And if you want to learn more about personal finance, check out my channel. We have hundreds of videos that can help you become financially free.